a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Let's take a look at marijuana stocks now, the craze that surrounds them, and how all of that relates to ETFs with our ETF research director, Nina Mishra. So the first thing you're going to do is weigh out the risk versus the reward, right?
Exactly. So pot stocks have been really hot. And this craze kind of reminds me of the crypto craze that we saw in November and December last year when Bitcoin soared to nearly $20,000 and it is now trading around $6,400. Pot stock Tilray, which IPO'd on the NASDAQ at $17 per share, is now trading around $114. So this has been just crazy. So I thought it would be a good time to discuss the risks and rewards.
Sure.
And I totally agree with the benefits of investing in pot and pot stocks, because this is an industry which is, coming out of the shadows. It is growing and gaining legitimacy. According to Euromonitor research, legal market for marijuana in America will grow to $20 billion by 2020 from just about $5 billion in 2015.
Wow.
And as cannabis consumption is becoming more mainstream, in fact, according to a Pew Research survey, a recent survey, 61% of Americans approve that cannabis should be legalized versus just about 31% earlier. And so this consumption is becoming more mainstream, and whereas consumption of sugary drinks and alcohol is going down or flat. So that is why a number of beverage companies are investing in cannabis. Coca-Cola has been in talks with Aurora Cannabis, and Constellation Brands recently invested $4 billion in Canopy growth. And then there are, medical benefits of marijuana, which there is research which proves those medical benefits. And one of the reasons why Tilray soared was because the USDA DEA had approved import of study drug into the US, Tilray's study drug, which would be used for study on essential tremors. And Tilray also got an export order from Germany for export of medical marijuana. And Canada is going to legalize recreational use of marijuana starting next month. So that is going to be another big market for these companies.
Yeah, so everybody seems to be jumping on this bandwagon.
Right.
On the flip side, what are the risks?
So in the US, 30 states and the District of Columbia have legalized marijuana either for medical or recreational use, mostly for medical use, but it remains illegal at the federal level. So that is why there is a lot of regulatory uncertainties in the US. And that is why whenever there's any report of any new regulation coming out and then these stocks sell off, that is why they have been really volatile. And then these are all young, risky companies. Many of them are not profitable yet. And they are trading at insane valuations because their prices have gone up so much. So that kind of tells me whether it is the exuberance is irrational in these names.
Wishful thinking, maybe?
And, as the industry is growing, there would be more IPOs, more companies will go public, and there could be saturation in the market. Like Tilray was the first IPO in the US. We would definitely see more pot companies going public on the US exchanges, and definitely many more in Canada where it is becoming legal.
So would you consider this the breakout phase for these stocks, or are we not there yet?
I think this is the breakout phase because it is coming out of the shadows, gaining legitimacy. But I think the price surge of these companies has been too much too soon.
Yeah.
And the valuations are getting irrational. So if you want to invest in these stocks, you should be aware of the risk as well and volatility associated with the stocks. Maybe treat these as speculative investments. Limit the percentage of these investments in your portfolio.
All right. Well, you did bring an example of apparently the only ETF that exists with these stocks.
This is the only pure play pot ETF listed in the US, and that the reason is because pot is still illegal at the federal level. But it has been doing very well. Investors are putting money into this ETF because they are getting excited about pot stocks. So if you are investing in pot stocks, maybe this is a good way to get a diversified exposure and kind of largely reduce single company risks. It charges 75 basis points in expense ratio, but there have been some problems with this ETF, so we are going to discuss those as well.
Sure.
Let's take a look at this ETF first. So you can go to the quote page on Zacks.com. As I mentioned, the expense ratio is 75 basis points. It has a nice dividend yield of almost 1.9% because it has been earning some money through stock lending, I understand. Now you can go to the external home page for this ETF and you will see you can look at the top holdings and other details. So you will see familiar names, companies which have been in news of late. Canopy Growth, which was in news because of Constellation Brands investment. Aurora Cannabis, which was in news because of talks with Coke. Kronos Group and Tilray because it has been so hot. So you can look at the weights in the portfolio and other holdings for this ETF. Now this ETF had some changes recently. It changed custodian also, and I do not know for sure whether that was related to banks not being, some of the banks not being wanting to get involved with pot stocks.
Sure.
That could be the reason. And it has been trading at a premium to its net asset value. Now that is not very common in the ETF world. We have discussed that issue in case of exchange traded notes. Whenever there is any disruption in creation of notes, then usually ETNs trade at premium or discount to their NAVs. In case of ETFs and this ETF, it is possible because of volatility in those stocks and maybe the underlying stocks were not available, so that is why this creation problem was, creation of ETFs was getting problematic, or because of the switching of their custodians and other service providers, maybe all those processes got disrupted.
Is the change of custodian issue a red flag?
It could be a red flag, but the ETF provider says that everything is going well and it's the NAV has been premium to NAV has been because of the volatility of the stocks.
I see.
But it could be a red flag. I'm not sure. But investors should remember that in the US, it is still illegal at the federal level, and banks usually do not want to get involved with pot stocks. And they should also remember that if you buy an ETF or ETN when it is trading at a premium to its NAV, you could lose because the premium is going to crash after some time, and if you sell, you could be hurt by those losses.
Okay, so do we know how this compares to the broad market?
So on this chart, I have the comparative performance of this ETF versus the S&P 500 ETFs, and I have also looked at the performance of some of its top holdings, and I have taken the period starting when Tilray went public, because I have taken Tilray's performance also into account. So as you can see, Tilray is the best performer, up 500% in about 2 months. Other holdings have also done pretty well. For example, Canopy Growth is up about 100%, and Kronos Group is up about 80%. The ETF is up about 40% in that time period, whereas the S&P 500 index is up just about 4%.
Yeah, so big difference there.
Yes, definitely.
I have to ask, you know, I always do you own this?
I do not.
Okay, thanks for that information, for taking a look at this craze. And don't forget, there's more ETF information on our website, Zacks.com. Go to the homepage, use the Funds tab in the top toolbar, and take you right to it. And also don't forget that Nina has a weekly podcast regarding ETFs and new developments and trends and issues affecting that particular sector of the market. So to access that, just go scroll down to the bottom of the homepage at Zacks.com and click on the podcast link. Take you right to it. With Nina, I'm Terry Ruffalo.